Hello and welcome to Unenjoyment Friday, February the 2nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. Unemployment Friday, that means non-farm payrolls, but let's go across the pond real quick and check out Great Britain's construction spending came in. PMI, Purchasing Managers Index, came in at 50.2, expected to be 52. So the line in the sand here on any of these PMI numbers, CPI, or actually PMI and things of that nature, anything above 50 is expansion in the economy. We are treading, or Great Britain, I should say, is treading just above that expansion line in the sand at 50.2. So anything below 50 would be contraction. So just keep your eyes out for that going forward. Then here in the United States, average hourly earnings month over month increased to 0.3%, was expected to be 0.2%, and they revised last month's number up from 0.3% to 0.4%. So better than expected on that. That should help the mandate for inflation in a sense. As soon as we start seeing hourly earnings go up, we would expect to see the consumer start to spend. Non-farm employment change came in at 200,000 hires, expected to be 181,000 hires, and they revised the last month's number up from 140,000 to 160. Unemployment rate remained the same at 4.1%. University of Michigan consumer sentiment came in at 95.7, expected to be 95, and factory orders came in at 1.7, expected to be 1.5, and they revised last month's number up from 1.3 to 1.7, so better than expected across the board there. And then later on this afternoon, we have FOMC member Williams speaking. All right, on to the overall markets. Nobody's happy on this unenjoyment Friday. We used to call that Unenjoyment Friday on the unemployment non-farm payroll number. Just a little play on words there. But anyway, you could call it an Unenjoyment Friday also because most of the markets are down, and that means nobody's happy for the most part, except for me, of course. Anyway, on to the crude oil, down over $1, back into the trend channel that we've been talking so much about. Yesterday, I thought we were going to struggle to get above that. They did pierce and then off to the races, as you can see. But today we have an engulfing candle setting up here, just basically retracing all of yesterday's gain. That is pretty bearish going forward, usually when you see that full-on engulfing pattern, especially if we settle back down inside of this trend channel. Gold futures off quite a bit by about $16 today. Overall market's just liquidating everything. I would expect to see, with the Dow down almost 300 points or Dow down 300 points, that we'd see a little bit of boost in gold, but it's just time to take profits, it looks like, on this massive rally, that people are just taking the opportunity to get out of some longs. Then we have Bitcoin futures. They're in the 8,000 handle, trying to test that 9,000 handle earlier, or just in the last 15 minutes. But as you can see, overnight went down to 7,700. So that's the low of the futures anyway. That is a pretty scary number, I think, for most longs in Bitcoin. Now that we're below this 10,000, it could get a little sketchy. So nice little rally into today's session, most likely due to the downside in equities is my guess, but it could be looking at value taking going on down here below 10,000, that people are looking at that as a value place to buy. All right, bonds down 1.5 right now. They are just continuing to slide. Took out this previous low that we were talking about, 145.17 is what I thought it was, but 145.23 we'll call it. And wanted to test that 144 handle. As you can see, we are very close to that today. The overall market's just continuing to slide. Good economic data, inflationary aspects in the average hourly earnings. That is going to be expectations of higher inflation with higher wage participation going on there, or higher wage demand, or that's not the, I'm failing for words right now. But anyway, the higher wages is going to drive inflation, hopefully, at least for the Fed. All right, VIX did go up into the 15 handle today. Love seeing the VIX at these highs, especially during earnings. It just even pumps up that volatility even more for those earnings, which is great. Love to see that happening throughout this earnings season. It allows us to get further away from the underlying trading and other markets that aren't participating in earnings or after earnings aren't going to see as much volatility come out of them as we would probably normally see. On to the Dow Jones Industrial Average, down over 300 points now, 16 points. But the overall market has not seen a real uptick in the Dow Jones. Whereas the NASDAQ, we were getting a little bit of a bounce, came down, tested this trend area. This is what I was talking about the last few days, is we're getting a little overextended to the upside. I would expect to see it come back down into this trend channel and kind of bounce around for a little bit. But the NASDAQ down over 50 points right now, with the E-mini S&Ps also following suit, down almost 30, down 27 and change. Overall markets, just we haven't had bigger moves on the downside than we have this week, basically for quite some time. So pretty bearish week we've had here this week. So and as we can see with the overnight inventory getting short, did get a little bit of bounce heading into the opening of the morning session, try and cover some of those shorts, but then the overall market opened up during the day session and continued to the downside. Didn't even try and wash those those shorts out. It just continued on to the downside. So usually we'll see a little bit of a bounce trying to take those guys out. And this number here, still that number that is not done or has not been printed in the day session, that those guys are going to at some point want to go back and revisit. All right, XLK. Remember, I put on all of these ETFs kind of heading into earnings season. On Monday, I was just wanted to get some things going. All these ETFs had super high implied volatility, so I threw on a couple of them, took off one already, took off XLK today, and I had on the March 72 calls that I was short. I sold them for 42 cents, bought them back this morning for 15. So a little bit better than 50% of my max profit. It was at max 50% of max profit. This morning I just put in a 15-cent bid and got hit a little bit after the open. Google. Google is a trade that I did both. I think I did this, or did I just do Amazon? I just did Amazon in my IRA. So I did Google in my margin account, not in my IRA. Went into the February weekly, sold the 1,075 calls in there for $1.70. Bought those Google calls back for 20 cents. So a nice profit there. Despite the fact that the directionality was incorrect. As you can see, the overall market's directionality was wrong in Google, but was able to get out on the bounce this morning. Did want to go down there and test those 1075s. Got as low as 1095 after the close, but this morning market getting a little bit of push to the upside and allowed me to get out of those nicely. Apple, another one that came out and beat on earnings, but has been slammed. People talking about they only sold about 1,000 of the $1,000 phones or something like that, or I don't remember exactly what the number was, but it was not what they were expecting. So Apple did come off a little bit, but the beauty in being short puts with high implied volatility, directionality wrong, but was able to get out of these for a nice profit. So I went in the February weeklies, sold the 155 puts in there for 30 cents, was able to buy those back for 2 cents on the open, and I did it right out of the gate. So that was a nice little trade. It looks like it's kind of gone against that since then. Probably still get out for a couple of pennies anyway. Into Visa. Visa I played to the upside because MasterCard beat so well. I think it was kind of already priced into Visa. They came out and beat earnings by about 8 cents, but it was just a little bit less than what they were expecting as compared to with Visa. I think that they had pretty good forward guidance as well with the increased interest rates. So I was a little surprised with the sell-off at Visa this morning. But I went in there again, sold puts, went into Visa and sold the February 120 puts in there for 33 cents. Was able to buy those back for the Visa trade was back for 8 cents on the open this morning. You know, I do that in like the first 15 minutes on all these. As a matter of fact, I was scrambling and messed up on my Amazon in my IRA account. Again, same situation as happened yesterday. Happened to me again today. I changed the prices in there because it was right before the open. They were giving me like $1 something. I tried to change it down to 25 cents, put that order in, and I immediately got filled, which I knew something was wrong. So in my IRA, I had on the Amazon trade, I went into the February and I sold the 1,295 puts in there, and then defined that risk by buying the 1,265 puts. And I collected a total of $2 on that trade. Now, this morning, got the right direction move, tried to put it in for a quarter. I think the offer was pretty high. There was no bid or offer right on the open. Put in that 25-cent bid, and it just shot off to the races. Immediately got filled at 78 cents. So a bit of a fat finger 2 days in a row in my IRA. Not very happy about that at all because I went straight over to my margin account and covered those same February 1,295 puts in there that I originally sold for $3.35. Bought those Amazon puts back for 4 cents in my margin account because the directionality right off the market, right off the open, started rallying. I tried to put that bid in and it went off to the races. I was just going to try and get out for a quarter. I'm not very happy at all about that, but that's what happens. But don't like to see that 2 days in a row, to be quite honest. All right, I must be missing a I did the Apple trade. I did talk about Apple. One thing I forgot to talk about with Apple was I did that Apple trade in my margin or my IRA as well, and sold the 160 puts, and then bought the 149 puts to define that risk for 80 cents. Bought back just the short puts for 10 cents this morning. So a nice little winner there as well on that one. So I think I've gotten through all of those. The only thing we've got on Monday is Hess, and they usually have pretty good markets in the options, not so much lately. This is the only one that I'm going to be looking at for Monday morning before the open trade. I don't think I'm probably going to put this one on. I just looked at the options a minute ago, and they're pretty wide in there for the weeklies. All right, that's about it. Today's webinar is going to be on the synthetic long. So if you have a smaller account or you're just wanting to play directional moves, this is a lot cheaper way to do it. It's synthetically a long stock, and it's going to act the same way. You're not going to get dividends and things of that nature because it's options, but the directionality, you will get paid out basically dollar for dollar on a directional move to the upside and or to the downside, just like a stock, but you're going to use about 75% less margin. So if you have a smaller account, that's pretty big when you're trying to build a balanced portfolio. It's hard to build a balanced portfolio with a small account. Even $100,000 or less, it's hard to spend or build a balanced portfolio using stock because there's so much margin. Now, with this, you're going to be able to buy the stock that you actually want for a lot less. And I'll show you how to do that in today's webinar. So if you can't take that, take it easy.